Hi there, Trace. This is Brad Gilbert with the FX Market Insight for Friday, the 13th of March. Now, quite ironic. I remember many years in the dealing rooms, Friday the 13th was a massive risk-off day, as in everyone, the managers, very superstitious, used to come around and shut us down. Now, you throw Friday the 13th in amongst what's going on at the moment, it very much looks like a crazy horror Hollywood movie. The Dow Jones down, well, 9.99%. Come on, could be 10%. What we're seeing now is a global meltdown, right? So Trump's come out and basically stitched up the US 30 days for for European flights. You know, the UK is excluded, but clearly that's going to have a massive flow-on effect through every aspect of the equity markets. And the equity markets are his baby, right? He doesn't understand. He probably still is thinking, hang on, what did I do yesterday? I've actually crucified the one thing I've been trying to prop up. So what we're going to see is we can see liquidation here. Now, just looking at the correlation matrix, it's very hard to work out what's going up, what's going down, what should stay and what shouldn't. All we can work out is this is where a tool like the correlation matrix comes into play. We know the driving force is the equity markets, right? So then you can come back and go, well, if that's moving, what should I be concentrating on? Well, you're looking at pairs that are moving. Obviously, the yen and the yen crosses are the main flavor. Then you can sort of work out what other pairs, especially the ones that are negatively correlating, are the ones to focus on. Euro, sterling, dollar, CAD, clearly the pairs besides the yen crosses to be focusing on. Outside of that, it's getting a bit loose. Now, this whole risk on, risk off profile, right, coming back to the GFC, it loses its flavor. Right, the correlations start breaking down. Like you look at the equity markets there, you look at the yen crosses here, and of course they're slightly up. You know, they've been pushed so far, I wouldn't be surprised to see some sort of correction. Even in these markets, you're going to start to see some volatility. Coming back to the global financial crisis, right, we were seeing ranges of 300 to 500 points every day for all the majors. So get yourself prepared for some volatility. It's very hard to work out where to start, where to stop. When you come back and have a look at a few things like over here, just come over to the news. It's going to be a little bit loose. Actually, let me just come back to the Market Insight page, probably get a better look at what's being touted around. Obviously, what you're going to see is market meltdown sort of articles, suffer massive record meltdown. The ECB, well, we knew their hands are pretty much tied. Interest rates are at zero. They've already got stimulus measures in place. They've come out and done basically bugger all. So Euro's got belted down 100 odd points, 200 points. It's bounced back another 100. So it's a little bit loose. Now, what we are seeing is the Fed coming back in to try and calm things down like they did the other day. I think they came in and bought bonds. What we want to see now is a continuation of that. Seeing volatility like this in the bond markets, if I just bring you back to that, it's like you don't usually see this. And this is very much what was happening during the global financial crisis itself. These US treasuries are all over the place. Okay, just keep an eye on what's happening there. That is another raw nerve. Now, when you come back and have a look at the dollar index, of course, the dollar is, overall, it's rallying, right? Well, you can see this very clearly. And if I bring you across to the rest of the charts, you'll see that the dollar, right, it is rallying. Okay, dollar yen's pretty much sort of neutralized itself. Aussie and Kiwi, okay, haven't been an easy trade. Look at the price action here. It's loose as you like. False breaks across the board. Euro, if anything, broke down through this short-term support, acted as resistance, and then bounced lower. It's back into the middle of the range here as well. So it's getting to a point where it's starting to get tricky. Sterling snapped down through sort of 127, sort of 75-ish. And it's down here in limbo as well. And dollar CAD cruising to the top side. Oil back at sort of $31. It's moving top side. So the whole situation here, when you're looking at the major currency pairs, we're trying to work out, right, whether they're going up or down. Now, fundamentally, the things aren't in play. Like what the central banks are doing, everything else. This is more about a rush to the safe havens. And the US dollar at the moment is the safe haven in like trade, right? This is very typical of the global financial crisis where a lot of these currencies and their economies were going great guns, and the US was the one melting down. Funnily enough, the dollar rallied sort of 20, 30 cents against most currency pairs. So all we can do is look at past price action and performance, and that should be quite reflective of what's going on. The situation now is a little bit different. Now, where do these currencies go? Well, I'm not exactly sure, because when you look at where we were during the GFC, central banks had a lot of interest rates to drop. Now, at this point, they're all getting close to zero. They haven't got a lot of room to move. So I don't know what's going to come around the corner. What I do know is if we come back to that risk on, risk off page, you've got to expect, equity markets to just take an absolute hammering. I mean, half of the move here on US equities, the Dow and everything else, is all Trump, right? He's just been working towards getting this thing to record levels. Now, if this thing starts to drop 10% a day, right, it's not going to be very long before it's at 10,000, right? So just keep an eye on that. Does it have ramifications for the currencies? Well, I'll tell you what, it's going to impact the US treasuries, the dollar, US dollar, even though the problem is there and the equity market, US equity market is melting, the dollar I expect to rally, US dollar to rally. So all we can do is really start to fine tune your trading. Now, if you have Metastock here, you're looking at the matrix and looking at the formatting, you can actually start to get a little bit clever with your levels here. I'd be sort of going say 90%, top and bottom, so you can actually work out, really isolate the pairs that do make a lot of sense. Okay, if I just recalculate that, we'll start to see which pairs are above 90, and as you can see, it's calculated. That's okay. It's recalculating. We should start to see what pairs are really, highly correlating and which ones aren't. So this is one way where you can take out, it's hard to see on the charts, but if you do have a look through a different set of lenses, like just numbers, you can work out Aussie yen, Kiwi yen, okay, and sterling yen. Get onto these pairs. And also you can see here, particular different equities are sort of behaving differently against other pairs. So you want to keep a close eye on that. Obviously, the Dow Jones being the catalyst for most of these moves. Keep an eye on those things there as well. All right. Outside of that, guys, I can't give you too much more advice. It's pretty hard to for me to logically say, right, let's get onto this pair, let's get onto that pair, because the correlations and all the practical actions here break down. Once equity markets start to perform like this, then what you're looking for is a flow-on effect in the Asian markets. Now, Asian equities, do they go up or down? Looks like these things have been suspended. Nikkei futures. So you're just having a look at the yen crosses. To me, the whole practical side of trading around these things is a little bit out the window. One thing that you should be doing is actually coming back across to the yen crosses and having a look what's going on there. And if I just bring you across to that, just to finish up, I mean, all we're trying to do is look for good trading opportunities. To me, there's not many, but I tell you what, if anything, the cloud is probably your friend at this point, because we know all the Japanese traders will be using the cloud. So maybe stick and have a look to that. Outside of that, you can see how loose the price action is up and down through that. What we're trying to isolate is, when will the yen kick into the downside again? Okay, when is it a big enough a problem that the safe haven comes back into play? And there's no rhyme or reason to when that logic comes in, right? All right, guys, that's it from me. Tricky markets. There's no major data out today. I think there's the University of Michigan consumer sentiment numbers in the US. I wouldn't be holding my breath around, looking for fundamental news. This is all bouncing around on geopolitical stuff. We don't know when the governments are making decisions and making announcements. The central banks are randomly coming in, trying to calm everything down. I think the smart thing to do would be give the markets a wide berth, give it some room to settle down, and then you'll be surprised at how quickly this can settle down and how quickly the trades can line up. All right, guys, plenty of action to come, I'm sure. Take it easy and have a good one. Cheerio.